If getting rich and being successful and investing was easy, everybody would be, because there's 1,000 books out there. It's not that easy. You have to build the stability first and get that in place, and then you can go after the wealth. So what we like to do is put a plan together that's as strong and stable and predictable as possible. And before you know it, you have this pile of money that you never, ever would have had. I think lifespans are increasing, but they won't tell us, because people will lose their minds if they find out that they have to now have enough money to live to 105 on average.
You're making 120 grand a year. You haven't been saving. You're 40 years old. What do you do?
First thing you do is...
What it is, Brad Lea back again with another episode of Dropping Bombs. Today in the studio, folks, I got a real treat for you, especially if you like money. Jerry Citarella in the house.
Who doesn't like money, Brad? Who doesn't?
Everybody likes it, but not enough people can keep it.
You know, keeping it is sometimes harder than getting it. A lot of people get rid of it as fast as they found it. Yeah, there you go. How many times have you gotten rid of it?
Every time I get it. Just recently, I'm waking up. Like, in other words, I'm mentally 30.
Okay.
And physically 57. Sounds so old.
Are you 57?
Yeah.
I'm 57. We're same age.
We're the same age.
Yeah, look at that.
And
it's not old.
And I've been blowing money for 58 years. You know what I'm saying?
I started fast.
I started in the beginning, but you know, it's stupid. And now that I know and I'm older, it's like, damn, I got to catch up. Yeah. So that's why I'm glad you're here, and people better pay attention, because Jerry Citarella is one of the world's foremost experts on financial planning, financial keeping, I like to call it.
Keeping.
Because that's what it is.
I like that.
You know, You're not teaching people how to, well, you do teach them how to make it, but they got to have some to make it with.
Yeah, there comes a point in your life when it's more important to keep what you have than it is to make more. You know, a lot of times you can always remake it, but at some point you're like, this is all I can make. Now what? Are
you one of those guys that won't help a young brother with, 50 grand?
You know, so it's it's been part of my problem as a business person. I have been told by every consultant, every mentor, that I need to have fewer clients, that I need to have minimums. I need to concentrate on 1 million plus. And I've always said, I'm willing to help anybody who's willing to be helped. If you come into my office and you say, I have this need, I have this desire, and I want to save some money and I want your help, there's no way that I can say no. And everybody's heard me say it. I get way more. If you walked into my office and said, here's $10 million, awesome. If I got an 18-year-old that walks in my office and said, I just got a new job and I want you to set me down a path, that excites me 10 times more than taking on a $10 million client. I love that. I love helping people start that path and find the success that they need. And
but don't you think the young ones don't listen?
Well, here's the thing. They listen when they have a reason to. What do we usually tell our kids? How do we tell them when they have to save? We tell them, you need to save because when you're old like me, you'll need some money, right? And you're trying to convince them to do things they don't understand. Their friends are telling them just buy Bitcoin. So I engage them and I help them actually understand it. And I take the time to educate them to the point where they know the why of the what. You know, if I tell a kid, hey, save 20% of your income, all he knows is that's fewer times he can go to sushi or less watches he can buy or whatever it is.
Do you say 20?
It depends. 10 is the general accepted rule. And if someone starts young enough, that's fine. But if we can get someone that has no money, that is suddenly making money, and have them start with 20, why not just start with more and then you can end faster?
Well, if they're that young, I'd start with 90.
Yeah, well, yes.
Because the trick in my book, and again, I'm saying it out loud so you can either correct me or agree with me. The trick in my book is save it all if you can, but not save it like people think. Save it to invest it.
Use it. Let your money.
So you don't really save it. You're saving it up so you have a decent amount to do something with.
Right.
Because you're not getting rich by investing $1,000, but you might get rich saving $1,000 a week or a month for 50 years.
That's the thing with compound interest. It's amazing. So if you set up a plan where you say you start saving this percentage, and it's just all about consistency and habits, like anything else. You know, I always tell everybody every 6 months, I want you to increase your systematic savings. Why? Because you won't notice it. If you're doing 50 a month, 1,000 a month, or 20,000 a month, whatever it is, if every 6 months you bump it up just a little bit, it just finds a way into your budget. and it becomes consistent. Then when you get enough that you can do some of the more exotic or extreme things, whether it be, real estate investments or something a little bit different, a little bit more unique where you can try to make a bit more off it, but you have to get there. Definitely have to get there.
So should people save every month?
I don't think there's an easier answer. Yeah, 100%. Yeah, every month or every paycheck, you have to be consistent. I get a lot of people that say, I don't think I can invest. I don't have enough money yet. Well, you make money. Is it all of it spent at the end of the month? No, but I just feel like I need to start with 10,000 or 20. No, every single month consistently. And it just happens. And the snowball starts rolling and gets bigger and bigger. And before you know it, you have this pile of money that you never, ever would have had.
And how do you feel about having more month than money?
If you have more month than money, you have to fix that problem. I always tell a story about you come home from work, you drive into the driveway, you got a pocket full of money, you get out of the car, there's a whole bunch of people on the side of the driveway with their hand out. If you get to the last one and there's no money left, you need to figure that out. First thing you need to do though is take some money out of one pocket, put it in the other. That's yours. Pay them and tell the last guy, sorry, you're disappearing from my life. Get off my lawn. And you need to figure it out. We have a lot of bad habits. We have a lot of things we like to do that cost money and we get sucked into it. But the reality is you have to pay yourself first and you can still enjoy life. I'm never, ever going to be the guy that says, don't do anything fun, don't experience life. I've experienced things, but you have to have balance and a good financial plan in place that makes that work for you. Too many people just do it willy-nilly, and the YOLO mentality, you only live once, let's just let it fly and we'll figure it out later. Well,
yeah, that's what I've been doing.
Later comes sooner than you think.
It sure
right?
does.
We're not 57. We're 26, I think, right?
I think I'm 30.
Yeah. How did this happen?
And what's cool because, when I thought, as long as you start investing around 30, you'll be okay. But I didn't do it. So I blew money and thought, I didn't understand it, quite frankly. No one ever taught me. I didn't get your education. I didn't have parents like you. Because if I had, I probably would be very well off. Well, I'm fine now because I make good money.
Right.
But I'm behind investment wise. So like I need to hurry up and invest. So when I come see you, I'm going to be saying, here's a chunk of money, but I have to accelerate, which is thankfully possible if you get a big chunk of money. And fortunately, I will get big chunks of money. Yeah. And so that's what keeps me sane.
But you've been fortunate. I mean, not that it's not lucky you made this happen, but you've created something here that unfortunately most people that start late don't get this opportunity at the end to have a windfall.
Yeah. So that's the only thing that keeps me sane. Because otherwise, dude, I'd be screwed. Yeah. I mean, 57 years old, if you're living on an income and you don't have any, I call it portfolio. You don't have anything. You're getting to a point where people aren't even going to keep hiring you eventually. And I don't care. Like, I feel like, dude, 57, like shit, dude, I'm an old man. Yeah. Like that's old.
If you didn't have a job right now, it's hard to get one.
But like who wants to hire a 57-year-old?
Two things you said are important. One is, thinking about it late. I get a lot of people that come in 45, 50, and they say, I need to meet with you because I need to start thinking about saving for retirement. And
you should have by 20.
I tell them, the book I wrote was called The Truth Helps series. Everything is just, as truthful as I can be. I'm not going to beat around the bush because that doesn't help anybody. I just tell them too late. Let's go.
Did you when you were young?
Yeah.
So you've been saving forever?
Yeah. My kids had their first accounts when they were 3 weeks old. I brought them to the bank when they could. So that's the second piece is the lessons and teaching. So I try to teach people. The problem we have is we live in a society where everybody is just all about the stuff. And I think the lessons we're giving our kids today are pretty bad. And then they get on social media and they here's 3 ways to get rich quick and just do this and do that. And their heads are kind of spinning. Now, we're seeing a lot of young kids making really good money. And I think a lot of young kids now are getting back into the idea of saving and investing. So there's been this wave where a lot of people just weren't concerned about it at all. But I think the teaching is the big part. And, I'm putting together some AI stuff to do that as well. So that's a big part of my passion. I've done my thing. I've been in this business 35 years. I'm partnered in a company. My clients they're there. So now it's what can I give back in mass while I'm helping people one-on-one? And a lot of it is about education and awareness.
I'm sure you've read the book, The Richest Man in Babylon.
Mm-hmm. Yeah.
I read that, which is why I should have been doing it.
Yeah.
Because now I understand it. Well, before I did not.
So in my book, first chapter, second chapter, maybe it says if getting rich and being successful and investing was easy, everybody would be, because there's 1,000 books out there. You go to Barnes and Nobles, what's the biggest section? Finance, self-help, investing. Why isn't everybody rich and successful? It's not that easy. And people don't think they need a guide. If I'm climbing a mountain, I'm hiring a Sherpa.
Well, I think saving's easy. It's what you do once you save it. Because like I should have been saving. I mean, I was making enough money where I could save 80% and still live killer. I was blowing stupid money on stupid shit. Private jets.
Yeah.
You're not supposed to be in private jets unless you have a portfolio and it's like passive.
Yeah.
I was getting paid and going, yeah, dude, I can afford private jets. I can get a Rolls Royce. I can get 2 Ferraris. I can get this. I can get that. And it didn't dawn on me because I thought that's how you got it.
Yeah.
You made a bunch of money and now you're rich.
That's what success looks like, right? That's the visual. That's the visual aspect of success. That's the entertainers. That's the athletes. Those are the people that people see. That's what they think success looks like. Great book, Millionaire Next Door, if you've ever read that.
Haven't.
Great book. It's a psychologist, a couple people. They just interviewed what we call real millionaires, the ones you would never, ever notice. They don't ever buy a pen. They get them from hotels because they're free.
I don't go that far.
But it's the idea of that.
I got Mont Blancs.
Yeah. Well, So it's the balance in that. But the idea is that there are people out there that understand what it takes to have stability. So there's stability and then there's wealth. Most people chase wealth and just miss stability. So my whole thing is you have to build the stability first and get that in place, and then you can go after the wealth. This was an office, right? It's here, it's fur. You can, whatever. What'd you do? You got it. Then you made it look cool, but you had to get the stable office first where, you can come every day and build a business. Then you build it out. So I think stability comes first, then wealth. Most people chase wealth and end up looking for stability around age 50. When that time it's too late.
Yeah. Well, for most people, unless they built an asset that's not liquid, because I can't invest equity.
No. Well, you could pull equity and invest it somewhere else, but that's a whole nother.
Well, equity in certain things, but like this business, I have to sell the business in order to, because this business might be worth X amount. Well, that's my money, but I can't invest it. Yeah.
But it creates the income for you that allows you to live. So, yeah.
But I want to take that income and quickly get it invested. So I'm going to be coming to see you off the show to say, hey, here's what I got. Here's what comes in. It's more than enough. So that's fortunate.
What do we do with the rest?
But how long is it going to last?
Right.
Because again, you get your monthly expenses to a level where this covers it. And then you're this. And all of a sudden one thing happens. And all of a sudden you go a few months without income and you realize, well, damn, your savings are depleting quick.
Yeah.
And when you start factoring like shit, in a year, I'm going to be broke. I got to get some money. Well, what if you don't have the ability?
What if you don't have the liquidity?
But you have all the assets because you thought you were rich.
Yeah, that's
because assets are not really assets. Yeah. A lot of times people think they have an asset and they've got a liability.
Yeah. And that's where fire sales come in and people get good deals off your stuff when you're desperate. So good planning tries to avoid that. And you have the right mindset though.
Do you have people that like come in with a windfall lottery win inheritance and say, here, make that work for me?
Yeah, I get a number of those. Unfortunately, a lot of those people blow it because they have no clue what to do with it. And I always tell people when you're used to drinking beer and you start drinking champagne, it's hard to go back. So go slow.
But do you tell them what to do with it if they're smart enough to invest?
Here's what I tell them. I'm going to, again, very honest. I say, here's exactly what you need to do to be okay and enjoy yourself. Just because you inherited 10 million or won a lottery for 20 or whatever, it doesn't mean you can't enjoy some of it, obviously, but that becomes part of the plan. And I tell them exactly how to do it, exactly how much they can pull out each year using reasonable numbers. And then we monitor it. And if it gets better each year, we improve it. You got to raise because we earn more, whatever it is. And I'd say even with me, and I'm not subtle, and they have a plan and we agree. And it's, there's documents saying, Jerry put this together and I'm going to sign it saying I agree and I see it and understand it. I'd say 50% of them still mess it all up. And
how?
They just think they're just going to do that one thing. I mean, I can give you an example of a few of them. A lady got a big inheritance and she told me, she said, I need your help because I got an inheritance not this big and I blew it all when I was 22 and I don't want that to happen again. She and her husband alone, no kids, no nothing. They had a nice little house. They decided they needed a house that was almost 2.5 times the size. Okay. Then they had a nice motorcycle. They needed a brand new one, and then a new car, and then this, and then that, and then travel. And when things started going really wrong and she got depressed, she decided she was going to buy a horse because when she was a kid, she had a horse and they made her happy. So she bought a horse. It cost that much for a horse. This isn't funny, but ironic. The horse threw her, ended up being $30,000 in medical bills that weren't covered. And so it was just this thing where you go, well, I got all this money. Let me just do this. And it's okay to do that thing you've never done before, but you have to realize, okay, I'm going to take a private jet because I never could. But just because you inherited $5 million doesn't mean you can take a private jet every time. And that's where I go back to the beer turned into champagne. It's hard to go back to beer. So you have to kind of find it. Many people that get big windfalls are broke within 5 to 10 years. And it's horrible to see.
Well, fortunately, and I don't know why, but fortunately, I don't think that's going to be my story.
I hope not.
I think I'm going to get a windfall. I'm going to exit a few. I'm going to find a guy like you or you.
I'm here.
And I'm going to go, bro.
Let's do it right.
I'm going to pretend I don't have it because that's what you got to do.
That's the best
and
way.
Then whatever comes from it, that's my money.
Yeah.
Like it or not. So that's, in my mind, the right thing to do. Is that right?
That's right. And the hard part, and I understand and accept this, is you finding somebody that you can trust at that level.
Why do I got to trust you?
Because I have your money and I have some control over it. And
you can use it without me?
I can't use it without you, but I have decisions that I make about it. You have to trust that I'm guiding you in the right way. Not like we're going to steal it, but if I say to you, I'm going to put this plan together that gives you X, Y, Z, the money.
But don't I transfer it, or do you?
You mean transfer?
Do I give you my money?
You don't give it to me. You put it in the account that I oversee and manage.
And you can use it.
I can send it to you. I can't use it, but I can manage it and buy things and invest in ways that we agree on. So the trust comes in if I come to you and say, here's your plan that I think makes sense. You have to trust that I know what the heck I'm doing.
Well, that's just track record.
You also have to trust that I'm not going to skim a little and do some other things. And there's a whole nother show. Again, I wrote a book, Truth Helps, about the people in my business. And I'd say about 20% of us are really, really good. There's another 20 that are good enough. And then a whole bunch of them that I don't want to say they're bad intention, but they just don't do the job as
shady.
Well. There's about 15, 20% of them, maybe 30% that are shady. We'll classify them differently, that are just bad people. And I've been a witness in courtrooms and took down a big company. And that gets me excited when I can take some of the bad guys out of the business, because they typically target the elderly. And that just sucks.
But they're licensed?
Yeah. They're not coming after you. They're coming after the 68-year-old ladies. You can actually buy a list of recent widows and it talks about their net worth. And these guys are buying those lists and going in and being their friends and hugging them and bringing them flowers and stealing all their money. I've seen it 100 times. But the trust factor is you have to believe in the person doing the job for you so you can forget it. That's what you said. You want to make believe I don't have it. You want to forget it. That means you're putting your trust in me to do that job for you in terms of the planning, the investment management, the distributions, and making sure that I'm not missing anything, because there's always has to be a contingency plan.
Do I need your permission?
Do you need my permission? I need your permission.
That's what I thought. So like if I gave you $10 million and I said, hey, put that in real estate, and you say, no, dude, you need to put it over here. And I go, no, put it in real estate. Will you do what I tell you? Or will you say, no, take your money, bro. I'm not responsible.
So I'm in a place where I understand and accept it's yours. And whatever I say, I know you'll be okay with it. And there's some places that are close to it that I would still feel comfortable working with you. But if it gets to the place, I have a lot.
Or I'm risking.
Over the last couple of years, everybody, I want 80% of my money in Bitcoin, or I want 80% of my money here. And it's just, there's too much risk. You're 75 years old, and I enjoy cryptocurrency. We all understand it. If you understand it, you understand it. But if you're that old and you want to buy it just because you feel like you're missing out and it's that risky, I can't take you on as a client. So within reason, we can work together. But if it goes to a place where I say, no, we're not a good fit.
Well, in my mind, real estate is always a good investment.
Yep.
I mean, assuming the deal's right.
Yeah, as part of a portfolio. And some people have 100% real estate. Some people have 100% stocks, bonds, and other. I think a combination of the two works extremely well.
What's your percentage formula?
Depends on the individual. And it depends on whether I'm just
using this podcast for a free consultation.
Let me send you my bill. the honest answer is I have no idea because we haven't talked enough about you. I can't look at you and just say you're a 80-20 guy or a 60-40 guy. There's no spec home. There's no spec plan. Every plan is individualized, and we take pride in that at our company because, again, a lot of companies, before you walk in, they already know what they're going to try to sell you. I was talking to a lady the other day. She just got an unfortunate windfall, a wrongful death suit. Husband died in the hospital, and they just got a big lawsuit. Plus, she's getting a big inheritance. She has 12 or 14 properties currently, and she said she just doesn't want any more. Okay, she's all real estate, and she's made a decision at this stage in her life that she's done. And part of the problem is she had one in Altadena. They were remodeling, and then it burned down, and she realized the downside risk in real estate is greater than she realized when something really goes wrong.
I thought you have insurance.
Well, in that situation, it's hard, with the whole
what
thing.
About insurance? Is insurance a good place to put your money?
You mean insurance-based products like annuities and life insurance products?
Set up I forget what they call it, but infinite banking.
Well, yes. So here we go again. Every product has its place when appropriate. And I've been doing life insurance since 1995, and I believe in it heavily. But it's not the answer. It's one of the answers. So that goes back to the planning process.
So you'll custom create it based on the person's desires, goals, family, and exact situation.
I'll guide you through the process of understanding. You talked to me before this show, pre-interview. What do we want to accomplish? What are we trying to do? What are your goals? What's your history? What's the objective? Kind of the same thing. And then I use my 35 years of experience, the team that I have around me, because in our firm, we have specialists. We have an insurance specialist. We have a college planning specialist. We have an attorney. We just bought an accounting firm. So we'll bring all those specialists in if necessary. A lot of people, you don't need all the specialists. And then we bring outside people. If you're in a situation where you have a high estate, then we're going to look at some estate planning, maybe some tax avoidance, maybe some charitable gift planning, and kind of put it all together. And this is Brad Lea's plan. It's not, your plan is not like anybody else's.
Really?
Yeah.
That's weird.
I don't deserve my money if I'm just going to put everybody in the same bucket, right?
Yeah, but you might have two people in the same bucket just coincidentally.
Yeah, people are similar. And, and it's very often similar looking buckets, but different amounts in each piece. So
Not only that, like if you came to me and gave me 10 million, I told you to do this because, this looks good.
Yeah.
And you're crushing it. And then he comes along and says, hey, I got 10 million. What can you do? Shit, you might want to get in that.
Well, it depends on the risk in that.
And their age.
Just because you're crushing it doesn't mean it's right.
What is your normal, not yours, but what is a person's normal return if they're using conservative numbers, average per year in interest?
Okay. How do we define conservative? I'll define it as I think you are.
Safe.
Okay. So
like where if I said you got to guarantee this return, could you and would you?
So guaranteed is different.
Any amount.
Guaranteed is different. That's why I was asking that question. Guaranteed is just dependent upon fixed interest rates, and they've been good lately because rates have been high. You're talking 4.5% potentially. But safe, what I would consider a safe conservative
Treasury bills.
Investment. When you use the words investment, that's different than savings. Savings is savings. Savings, you attach an interest rate to it, you attach a term to it, whether it's daily, monthly, quarterly, 6 months, 8 months, boom, done. Fixed annuity or something like that. You can have a 5-year fixed annuity, a 6-year. That's that.
And there's no way to get screwed out of it.
When you use the word, no, unless the bank or the insurance company goes under.
Which is possible.
Yeah, but we use, if we're going to do that, we use good companies. And typically the good companies, if they have a problem, they're bought by a bigger good company. So those are pretty safe.
Okay.
You're only as strong as the insurance company that's guaranteeing it. But there are lots of good insurance companies that have been out since the 1800s. They're pretty stable. Insurance companies have a lot of money. And the reason they have a lot of money is they have long-term investments inside of them, whether it be these long-term annuities or life insurance policies. So insurance companies invest in things that other people can't. They're going to build a pipeline. In fact, they did. What's the big pipeline? Alaskan Pipeline. There are a lot of insurance companies that invested in that because that was a decades-long investment that nobody wants to be there that long. But if they know they have life insurance on Brad Lea, who's 22 and probably won't die until he's 85, that's a long period of time that they have that money that they know they're going to be able to use it. So insurance companies make a lot of money on these unique type of investments where they can put their money. So a lot of stability in insurance companies. And I'd say probably, I'm going to say probably instead of for sure, but probably way more stability than the banks. So I like using them for that type of stuff. But a conservative investment, realistically, there's this thing called the rule of 4%. I don't agree with it. What that says is if you're retired and you need income, you can count on 4% return. So for every million, you can take 40,000 out per year, and then the money would continue to grow, hopefully. I think you can do something realistically a bit higher than that. And the 6% range is reasonable. But we're getting in a place that's interesting. We used to go to bonds, and bonds just haven't had the performance. And then there's more volatility in the stock market. So you have to be better now. You have to know what you're doing. You can't just throw it in something and it just happens anymore.
Are you watching stock prices, and are you the guy that is up reading the review journal, or not the review journal, the Wall Street Journal? And
me, no.
You got people.
We have a team. Yeah, we have an investment. I'm on the investment committee. We have an analyst. We have a team of people. We have portfolios that we've been managing. We call them our models. One of my partners created them before I met him, and then we played with them a little bit. Then he just made them awesome. They've been around, some of them 20 plus years.
Is that where my money would go, in those models?
Your money would go in those models, probably, but we may do something a little custom on the outside just because you have a unique need. I'm working with someone right now that they have a very, very different kind of situation that we're using the models, and I'm doing something on the outside. So we have 12, what we call core models, 4 models that are individual stock portfolios. Fortunately, amazing performance. We're real proud of it, but we do real well as a company because of the planning we do, because of the reputation, because of the tradition. But we also happen to just knock it out of the park when it comes to the investments. Everybody benchmarks against the S&P. Our stock portfolio has crushed it. Our technology portfolio has crushed the NASDAQ. So we're real happy that we can not only do the good planning, but actually deliver the investments in a world where most people are just average. So it works out real well. Yeah. So you'd be in those models or some combination of them, maybe an insurance product, maybe a real estate product in my world. And then I would also recommend maybe you buy some real estate on your own, because I'm not going to handle a real estate transaction if you want to buy a building. That's something else, but we can build that into the plan. And what's nice is when you model it all out and you have the in-depth financial plan, we can put them up against each other. And the thing I love about math is it's never wrong. It doesn't lie. I don't care who tries to tell you 2 + 2 is 3 or 7 or 9. It's always 4. So when you look at the math,
not always.
What calculator are you using?
There's weird anomalies where math doesn't work. You've seen those?
Yeah.
Those are trippy as hell.
Yeah, you're going deep now.
I know, but there are some.
Yeah.
And we're like, wait a minute.
How'd that not happen?
That doesn't work.
Yeah.
Like where's the missing dollar? You've heard those.
Yeah.
And you can count it forwards and backwards. And for some reason, they call it a phenomenon. Like math works, except then. But
if we put up this investment and that investment, we can understand and analyze and accept the risk in each. We can look at the potential return or the probable return. We can look at the upside potential, the downside risk, and we can look at it and say, I like that one. And it's not always the one that'll make you the most. If you had a 70% chance of making 10%, or you had a 90% chance of making 9%, maybe you decide, you know what? I want to go with the 9% with the higher probability for 2 reasons. 1, it's less stress. And 2, we can plan better around that. So what we like to do is put a plan together that's as strong and stable and predictable as possible, because then we can say, this is what you can do. This is what you have to save. This is what you can spend. Hey, Brad, good news. You can drink champagne now instead of beer because we have some predictability in this. It's the variables that mess up the plans. And those variables typically come when people are trying to chase something that is a little unrealistic.
I would think you just back into it. So I need $200,000 a month to live the way I want to live.
Right.
So, okay, you need $2.4 million a year. In order to get $2.4 million a year, you're going to have X amount invested conservatively at 4%. Well, what would that be?
Yeah.
That'd be $60 million. Yeah. Wouldn't it?
And that's something like that. But that's the easy way.
Yeah, but that's all I was thinking to do. Yeah. So if I cash out $100 million, yeah. Chunk's going to take, or IRS is going to take a chunk. And, let's say, okay, well, as long as I end up with 50 million, I should be fine. Is there a number that if someone has the ability to get there, is there a number where as long as you have 50 million, you're fine?
Well, most people don't need 50 million. Most people live on a much smaller number. So it all goes down to lifestyle. And that's why everything's I always tell everybody, anybody can retire. The question is, what do you want it to look like? So yours may be 50 million. Someone else's might be 5 million. A lot of people are $1 million or less because they have a pension and Social Security, a simple lifestyle, no debt. They lived in their house for 30 years. They drive a 15-year-old car. So
business owners, listen up. If your business needs more money, and it will, banks aren't built to move quick. They make you fill out a ton of paperwork, wait for a decision, and by that time, the opportunity is passed. So if you want bank rates without bank delays, you need to check out Cardiff. Cardiff's been helping businesses get same-day funding for over 20 years. We're talking up to $500,000 approved and funded quicker and easier than big banks. You can apply online in under 2 minutes and get funded as fast as the same day. So whether you need quick money to bridge a gap or do more marketing, get some equipment, or hire more people, I'm telling you, apply today at cardiff.co/Brad. Stop letting slow money cost you opportunities that move fast. There's no impact on your personal credit. So apply now at cardiff.co/Brad. Subject to approval, terms and rates vary. Cardiff, borrow better.
Again,
why would you have millions of dollars and do that?
Well, no, if you have millions of dollars, you're not doing that. The point is, what do you need? Everybody comes in and says, this is my life. This is what I want to do. This is what I make.
How do I get there?
So I can't tell someone, oh, you just need $50 million and you'll be great. But backing into it, you're right. At some point in the planning process, we get a number and then we have to figure out how to get there. The question is, what is that number? I mean, just saying 20 million, that's meaningless because that may not be enough. It may be more than you need. And if it's more than you need, then you're taking on more risks than you need to take. Now we're adding variables in. So I want the highest probability of success, putting you in a place that you have everything covered, the contingencies, the intangibles, the emergencies, that I can't work for a year, all of that stuff. What does that number look like? Let's get a little bit above it. But if we start going for here, which is some arbitrary number, then you have to just take too many risks sometimes. The best plan is the one that you don't worry about, really. Because people jump in and out too much when there's volatility. So if you start planning too high, again, it's stability versus wealth.
Have you ever seen just someone get wiped out that was invested conservatively?
Conservatively, no. Well, The only time I've seen people get wiped out, even if it's conservative, is one of those times like the 08-09 crash where they just say, I can't take this anymore. And they get out at the wrong time. I had a client call me, had a very good friend of his. He told me how smart he was. This is the smartest guy I know. He just told me I need to get out. And I don't know why we're not out of the market. He told me he just got out. So I went to this guy's house and I talked to him. He was a conservative investor. And the day he wanted me to get out was one day after the lowest day of the 08-09 crash, like literally. And he was telling me how smart his friend was because he got out 4 days prior. We kept him in. And in fact, about 2 or 3 weeks later, we got him a bit more aggressive and he crushed it. I think a year and a half or 2 years later, his friend was still out of the market just watching it happen. So there's a guy who's conservative that got wiped out because he acted emotionally and didn't understand the volatility. Big problem. Emotions are horrible for people. We're loving them right now with the environment we're in, with the political environment and everybody just kind of concerned about everything. The swings we're seeing are bigger than we've seen them for the reasons that are creating them than we've ever seen. And a lot of them are predictable. Like after the tariffs last year, that was a 3-day crash that we were hands up, happy, excited for the opportunity that came out of it. So we change our models a little bit. We can, manage them a little tactically, get a little more conservative, a little more aggressive. And we got a little conservative before that because we saw it coming. We got more aggressive at the lowest day, turned up the heat and rode it out till about June and just took full advantage of that. So the volatility and the emotions can crush you if you're the one being emotional about the volatility, but if you understand it and accept it and you can see it coming, you can take advantage of it as a good advisor.
Are their average lifespans increasing or decreasing?
I think there's, let's go down conspiracy row a little bit. I think lifespans are increasing, but they won't tell us because people will lose their minds if they find out that they have to now have enough money to live to 105 on average. I think life insurance companies don't want that number out there. I think there's a whole bunch of people, Social Security, everybody will realize Social Security is not going to last. So it's me. I don't know. I'm not in the meetings,
Well, that secret's already out.
But I feel like, I feel like life expectancy is longer, and the life insurance tables is what they are.
Did the actuaries believe that?
You know what? I haven't had a conversation with many of them, but some of them do. And it's something that I believe strongly from the little conversations I had. But, my dad's 86. If we called him right now, he would tell you, I'm busy. I'm playing pickleball or I'm golfing. I mean, he's going, and people are just living longer. And money.
Yeah, but if you
has to last.
I'm just using my own situation, and then I want to go to normal situations because mine is not normal.
You're a bit unique.
Yeah. So I'm thinking, as long as I get 50 million net, like I'll be okay. So in my mind, well, shit, dude, if I spend $1 million a year, which is only $83,000 a month, which that's, it's doable,
It's
but
only 20 something thousand a week.
It's not private jetting.
No.
So the bottom line is like, even if I was conservative and went 83,000 a month, well, dude, I got 50 million. That's 50 years at $1 million a year. I ain't living till 107, I would imagine. So I don't need to invest. What would you say to that guy?
I would say there's opportunities that you're missing. You can look at the opportunity to create wealth for future generations. If you have the opportunity to create extra wealth you don't need, then there's charitable opportunities that you can do. You can create a family foundation. You can just say, you know what, maybe I am going to upgrade my life a little bit. So I'm never the guy that says you have to go as aggressive as you can and make as much as you can. I'm a big believer in balance in a lot of ways, but I also hate wasted opportunity. So I would try to help you understand that even if you don't need it, you can still do better without putting yourself at risk, and then choose to do what you want with that.
What if you convince me to do it and you're wrong?
Well, then
now I don't even have 50 years left.
Then I disappeared, changed my name, and moved to Italy. I would say 35 years of doing this, any plan that we've put together that's been reasonable and long enough term. If you said, hey, I got a 3-year plan, that's very different than, like you just said, 50 years.
Well, because when I do it, dude, I want to not have to make $1.
Yeah.
Like, wouldn't that be nice?
Oh yeah, it'd be great.
Right now I got to work. If I don't make money, bro, my shit's draining.
There's a lot of stuff that doesn't happen.
If I don't make money, I'm going down. Yeah. Okay. Yeah. So I don't want that feeling. I want to get enough money, find a guy like you and say, okay, here's the money I got. And I don't want to have to make $1 more my whole life working. This is my money and it needs to last my whole life.
Yeah. And if you can do it with the principle,
yes,
never make any more, wonderful. If you want to maximize something,
well, I would want to
benefit someone else. That's the discussion we'd have. So the answer to is, what if it went completely wrong and you lost it all? Obviously, that's always a possibility, but I'm just letting you know my history, the history in our firm. We'll never guarantee anything, but we have a lot of long-term plans that it would be unreasonable to think that it would blow up on you the way that we would set it up.
So you're an RIA.
We're an RIA.
Now, again, when I hear financial planner, I think of some kid that has a license that's going to tell me where to make my money so he can make some because he don't have any.
Yeah. Financial planner, financial advisor, very, very loosely used terms. It kind of is all encompassing, and not everybody truly does those things.
But an RIA, that's a person that is leveraging your money to make a bunch of money for the firm.
So for clarity, an RIA is just a way to register and do the business. You could be with a broker dealer, you could be with a wirehouse, you could be with a bank. An RIA is more of an independent source, an independent avenue to get to the investments and everything else. So different regulatory agencies, but the RIAs are typically more independent. I do every meeting with a white pad. There's no products. We don't have anything we push. We have our models that we manage, but we're not pushing anything. There's no bonuses, no nothing. We just do good planning.
But if I had money with you and you found something, do you call me and say, hey, you got a little money over here and we're thinking this is showing, do you want to move over, or do you just move it over?
So it depends on the portfolio. Some portfolios we have discretion over, and within the boundaries of that portfolio, we can do that. We have a portfolio that's all stock. It's mostly big stocks and then some little stuff, baseball analogy, a bunch of singles and doubles. We put Ohtani in once in a while to hit one out of the park. That one's done extremely well. We can do whatever we want to do without calling you within the parameters of that portfolio. We have another one that's all small caps, small companies. We have a dividend portfolio. We can do what we want within those parameters. If we want to take you somewhere else, we have to get your approval.
You have startup capital, meaning because a buddy of mine, he's got stupid money. and he throws money at startups. And I'm like, dude, aren't you worried they won't work? He goes, you only need one to work.
One of them to work. Yeah. You can be wrong on 10. And if the 11th one works, you can make a killing. Yeah. We do some stuff. We call those alternative investments, where we have private equity, we have private credit, we have real estate investments, and all kinds of things that we have access to. Yeah. Pretty much anywhere that you can put money. The only thing that I would never be involved in is if you said, I want to go buy an apartment building. I'm not taking you down the street to look at properties, but I can put it into your plan and see how it builds out and how it plays out with the overall picture.
All right. Now let's get in normal people's world. It's because that's a lot of people listening.
Yeah.
And, you're making 120 grand a year. You haven't been saving. You're 40 years old. What do you do?
First thing you do is budget, and that's scary. You realize you spend $1,100 to $1,500 a month on Starbucks, and some people don't want to admit that's a problem. You look at the subscriptions that you have. You got the NFL package, you got Hulu and Gulu and this thing and that thing, and you're not watching all of them. And so the first thing you do is you really kind of go through the spending, and that's a tough exercise because some of it just happens. You don't realize it.
Do you go through it with them?
I can go through it. Well, they have to do it, and then I go through it with them. And then in our software, we can actually put it all in and keep track of it.
Damn.
So yeah, we go through it with them. And I've had some people that come in with that exact thing. Here's what we make. We don't know what's going on. We don't really have the ability to save. What do we need to do? And I'll start with the budget, and they never come back.
Because basically what you're saying is you got to scale back.
They're not willing. I've actually had people tell me, I don't care what you say, I'm not going to sell my Mercedes. So 120,000, 140, whatever the number is, 45 years old, no savings to speak of, no retirement other than something at work, and badass cars, the big house. I grew up in a 985 square foot house with one bathroom, 4 people.
Yeah, but like that, I was describing.
What happened that now we need 4,000 square foot houses and all this other stuff?
Well, you don't need them, but you want to live, man. So
there's the balance.
That was me that you're talking about.
Yeah.
So like I was making great money, but I had the nice cars and the nice house, and I went on the nice trips, and then I realized,
oops.
Well, dude, if something happens, I'm screwed.
Yeah.
And so I read the book Richest Man of Babylon, and I'm like, wait a minute, that means I have to scale back.
Yeah, reeled it in a little bit.
I have to give up the house, give up the cars, give up the trips in order to be, more stable. But and you know what I said? I'm not giving up that shit either.
You're gonna make enough money to keep it.
I'll make more. And so I went and made more, and I focused on making more. But that's not wise. Your advice would be, dude, you can do it, but that's not a strategy.
But most people don't have that opportunity. Again, you said this is the part where we're talking about real people.
Well, they do. They just don't realize it.
Yes, they all have the opportunity, but they don't. They're not going to take advantage of it. We know the reality of it. So the starting point would be, and it doesn't mean, again, you have to get rid of everything and not have any fun, but let's just find the waste.
Yeah.
You get a big juicy steak. What are you going to do first? You're going to cut off the fat, right? Because that's the part you just don't want and don't need.
Yeah.
And I find a lot of people without even struggling can eliminate 15, 20% of their debts.
Well, I can't believe that you deal with that. Like this is almost like child's play.
Well, it's
like if I got to go through your budget and tell you, bro, do you really need to drink every Friday and play darts with your friends?
Yeah.
Like it's almost
and
like
it's one of those things where if someone comes in and they want to be helped, I will attempt to help them.
That's crazy.
You'll have a meeting. There'll be no cost. I'm going to do what I can to get you in a place where we can move forward and build a plan that makes sense for you. Now, once we get you going, I may pass you along to one of the advisors in my firm that maybe has more time and ability to handle somebody in your situation. But I'm all on board. If I can change somebody's life, I mean, if someone's 35 or 40 years old and they have nothing saved and they're wasting money on all this stuff and they just don't see it, if I can change their life and put them in a place where they can now successfully retire at some point because of just some reality check that I did, reach across the table, slap you across the face a couple times, get you and your wife to accept that, you need to change some things. And it's typically one or the other. He's got a golf addiction. She's got a Botox or hair or nails. Starbucks is always the thing. Again, he's got the NFL channel. He watches 2 games a week, usually at a bar. I mean, there's just a lot of waste. And the cars and keeping up. I always joke, I got a cheap watch that the battery doesn't even work. Doesn't make me better than anybody else. It's just unimportant to me. And I have things that I waste money on. Don't get me wrong.
What do you waste money on?
I'm not sitting here. Experiences. I like experiences. I live in an expensive area because I can walk to the beach. That's fun. Like vacations. I golf a little bit, but I'm not, you know what? I'm not blowing money. I don't. I'm pretty simple. But I enjoy myself, and I go on vacations and I do things. And my wife always says, what's our budget for a hotel? The best one you can get for the price that makes sense. We're not just going here. I don't care about taking an Instagram photo on some balcony at the Ritz just so I can go, look at me at the Ritz. And,
but I
apologize if I'm offending anybody, but there's certain things that are important in life and certain things that aren't. And when when you have things that happen in your life that make you realize what's important, it kind of changes things. But I've always kind of been that way. So whatever your thing is, I can look at you. Like there's a bunch of people watching this thing. I can look at everybody's life and go, in my opinion, for you, this is unnecessary and it's keeping you from your stated goal of getting to this end place regarding your finances.
Yeah.
Are you willing to change it? Just like if I said this cocaine is ruining your life, are you willing to do it? That's what an intervention's about. Most people won't do it, right?
Yeah.
So I'll give it a shot. I'll take you by the shoulders. I'll give you a hug. I'll walk you down the path. But at some point you got to say, I'm going to do it. And then if you do, then we'll engage. And whether it's me or someone else in the firm, we'll take you down that path. And there's no better feeling than someone coming in and saying, I never thought I was going to be able to retire, but because of you, we just did it. And the best thing is they come in dressed nicely all the time until they retire. Then everybody comes in shorts and a t-shirt. I love it. It's the short and t-shirt transition.
Yeah, that's good. It's just crazy to me that like someone of your caliber, it will help anybody.
It gets harder and harder. But I built a team around me in our firm. We have a team, we had, I think, 4 or 5 interns last summer. It ends up 3 of them are now still with us as young advisors. And one of them is a paraplanner for us, meaning he does the input for the planning. So
you have a software for that?
Yeah.
Is that what Let's Talk Money is?
No, that's something I'm putting together, which is an AI platform that helps people understand money and how to have conversations around it. That's just a Jerry thing that I'm doing as an additional way to help people.
What is it? Let's Talk Money.
Yeah, Let's Talk Money. So information is out there, right? You can read a book on money. You can do that. The hard part is having conversations about it. And that's what this is about. First of all, what knowledge do you need to have an intelligent conversation? And how do you talk to your wife about budgeting if you guys see it differently? How do you talk to your aging parents about the fact that it may be time for you to take over their money? How do you talk to your kid? How do you talk to your boss? And there also is, how do you talk to your financial advisor to make sure they're doing the job you expected? Because most people don't know how to answer those questions. So you log in, you pick a scenario, you pick easy, medium, or hard, which is basically how hard the conversation is going to be. And then you put the camera on and there's an AI agent that's talking to you and basically giving you a hard time. And you have to go through the process and there's prompts. So if you tell your wife, that's the stupidest thing I've ever heard, it's going to prompt you to say, you're not going to get anywhere, buddy, slow down. And then it'll walk you through the process of having a conversation that leads to success. And then at the end, it grades you. And basically the system won't allow you to have that conversation or won't advise you to have it until you're above like 85 or 90%. So it's really just getting you to the place where you understand the why, and then it teaches you the how of how to have those big conversations.
Yeah, I'm sure you have one for how do you talk to your kids?
Kids is a big one.
Because like when you say, well, what do you talk to your kids about saving money? Like,
you better do it. You better do it. Yeah.
Like I've never done that.
Yeah. And I think the biggest thing with kids is, I
tell them, don't worry, you're going to get a bunch when I die.
Yeah. Good. But what if they want to have some of their own and have that pride? And so I think the biggest thing with kids is we expect too much and we also think too little. We expect them to be amazing, but we also think it's just, so I think when I draw a little circle and say, this is a stock, this is a bond, this is how this works, this is what compound interest does. This is if you wait, and just give them some basic understanding and they go, oh, now I kind of get it. And it's too often we just tell them, you need to save, and they don't get why. Well, that means I can't do something I want to do now. So if you give them a goal that they understand and accept, and you make them part of the plan and engage them, and then talk to them about, we're going to save $20 a month, and then we're going to raise it to 25 in 6 months, because whatever, then they can do it. And then all of a sudden you start getting calls from these 18, 19, 22-year-olds going, hey, I just got a raise. I want to make sure that I put more money in. And now they're engaged. So it's just really more about bringing them into the party.
And you got to do it early.
You got to do it as early as possible.
Yeah, because
it's so easy when you do it early. It takes this much money per month when you do it early. It takes that much money when you do it later. And that's at a time when you have way more expenses. The biggest advantage, if anybody watching this takes one thing away from it, yesterday was better than today. Today's way better than tomorrow. You're never going to have today again. And this is the soonest point in your life to start saving, and you're already too late. Just get started with something. And I think too many people think you have too much, and too many advisors won't talk to you unless you walk in with a big check.
Yeah.
And I think that just sucks.
And they're not even very good ones.
Yeah. It just sucks.
So kids, I got a 4-year-old, a 10-year-old, 12-year-old. What do you say to them? Are they too young?
Well, the 12-year-old and the 10-year-old can start understanding it. One of the partners in our firm, he actually has his kids every Christmas or birthday, whatever it is, they get money and they pick stocks. And then they compete each year to see who's done the best. So he's created a game out of it. My kids, we took them in to get bank accounts. I have pictures of them when they were young holding the thing. They did it and they went in, they signed for it, and I had them do it. They have accounts set up. I go through it with them. So I think when they're 10 and 12, they start to understand it a little bit. And it's just like anything else. If you're in a place where you're taking them to fast food every day, what's going to happen when they're on their own? They're going to go to fast food. They're going to become overweight. They're going to be unhealthy. If you keep them fit, you show them a diet and exercise and regimen and discipline, then they're going to learn from that.
So what are the exercises we can do with our kids that will start to teach? Because I've tried, not hard because I think they're still too young, but like one time my daughter texted me and said something about, hey, can I have $1,000? And she was just joking, but I just sent it. Mm-hmm. So nowadays you just Apple Pay, boom. And she goes, oh my God, I was just joking. And I said, well, there you go. Now you don't need any money. Let's see you save it. I want to see what you're going to do with it. Well, within a couple of weeks, it was literally gone on stupid shit.
Yeah.
I didn't know what to tell her other than, well, now you don't have any money, but guess what? I still buy everything for her.
Yeah.
So I don't think I did a good job with that.
So you're enabling her.
I totally enabled them. And what I want to do is stop.
Well, that's the first step is the awareness of it.
But I mean, do you have any good exercises that I can do?
First thing is stop is hard.
Because if I give them $100 and say, okay, let's see you save that. Yeah. They don't save it. They're like, but Dad, what am I saving it for? And I don't have a good answer. So, rainy day. Well, what's wrong with a sunny day?
Yeah. Well, I think if they have something they want, then you just make a deal. You save half, I'll give you the other half and get them engaged in it. And I think really just having the conversations with them about money. Take them to the bank. Have you ever taken your kid to the bank?
No.
Have you ever told
them? Who goes to the bank anymore?
Well, nobody, but go to the bank. Let them.
Do you know that brick and mortar banks are
going
completely unnecessary?
Yeah, 100%.
They don't want you to know that either because now they're just going to have all these buildings on their hand.
But they are still there.
I can run I can deposit checks. I can do it. I haven't been to the bank in years.
I agree. Yeah, I agree. The only thing you have to use the bank for, and you can use an ATM, is if you need to pull cash. And I'm sure they have Uber cash that they can deliver right now.
What do you need cash for anymore?
Well, I'm old. I like to have cash. Well, I'm in Vegas. I need a little cash. But I would say.
You think that's going away?
Cash?
Yeah.
Boy, here we go.
Well, they're all talking about quantum banking systems and everything. And Swift and replacing it.
I think it's going to be less and less and less. And I think the ease of transferring money between people and everything. Like you said, we don't need cash. The only reason Vegas still does cash is because you convert it to chips. I mean, you can do a debit card or something. That's, it's chips.
But have you seen there's businesses that do not take cash?
Which boggles my mind because every credit card still has a fee on it. So the cash is more profitable, but there's just a downside to dealing with it and an inconvenience now. So I think we're going that place and I don't have a problem with it. I mean, realistically, it doesn't matter. And people freak out about that.
Well, cash can't be traced as easily.
And that's part of the reason. Yeah. Part of the reason it's simplicity. It's tracing it. It's international. There's a whole big picture around it. But yeah, from a higher level, obviously there's someone that wants to know every transaction we're making. So I think that's kind of the pushback a little bit is people want some anonymity.
So what would be a good, exercise for a kid, not with if they want something, because they wanted iPhones.
Yeah.
I'm thinking what kids have iPhones?
Yeah.
All their friends have iPhones.
Yeah.
So I'm like, okay, we'll go get you an iPhone. I get you an iPhone. I try to make them work for things. So when they do want something, I say, well, you got to work. So I'm teaching them, you got to work for things, but I can't figure out how to teach them to save. Yeah. And every time I've given them money and told them, save it, I think they could, but save it for what?
That's the thing. There's no what. my kids, again, not perfect parent. I'm not out here to say we're perfect. They wanted, it was before iPhones. It was iPods, whatever it was, the music ones that look like an iPhone, but just play music.
iPods.
Yeah, whatever it was. They were young. And I have pictures of both of them. And I took the pictures because that part was important. They saved up enough, birthday money and everything else. I said, when you get half, I'll put in half. So it was a goal for them. And they both started saving. One of my kids started collecting plastic bottles. And that didn't last long. She did a bunch of plastic bottles and had bags and bags of them, took them to the place and got like $1.98 and realized that's a lot of work for $1.98. But what they did is they did that. We went to the store, went to Best Buy. They bought their things. I took a picture with them and we celebrated that they did that thing, saved the money to get this thing, and they felt better about it. The other thing was very less likelihood that they're going to lose it or break it, because they knew if something went wrong and it wasn't an accident, if it was something that was stupid and them just being irresponsible, I wasn't replacing it. Now they have a little skin in the game. Right?
So you were strict.
That's what it is. Yeah. I've always said, unless your kids tell you they hate you a few times a year, you're not doing your job.
Yeah, I'm definitely not doing my job because my mindset is, hey, I want an iPod. I say, okay, you got to work for it. They're like, okay, what do you need me to do?
Yeah.
Clean your room.
Yeah.
Whatever it is.
Yeah.
They go do it. Boom. We go get them an iPod.
Go get an iPod. Yeah. I think you need to make it a little bit harder.
Yeah.
Make it harder. And I think
I just want them to have what they want.
Yeah. We do as parents. We want them to have a good life, but I don't think you're helping them I'm definitely not helping in their future, being responsible and being able to handle situations. Then what happens if they break their iPhone? They call you and you go get them another one.
Well, we get insurance. We're not stupid.
But so I think, again, this isn't me saying I'm perfect. I've just learned a little things and I was very conscious of it. We used to have our kids do multiple tasks when they were young just to get them to solve problems. Do this when they're 2. Okay, do this, this, and this. And just kind of put a lot of thought into it ahead of time to make sure that we were raising kids that had the ability to function on their own and understand money to some level. They're not financially savvy to the point that, one would think they might be, but they get it. They have savings and they appreciate it. And then when they get their statement and the number went up substantially, they look at it and go, wow, can I save more? And that's where you want them.
That is where you want it. And that starts to happen when you make more than you spend. Because again, like I told you, I was spending what I made and I read the book and I'm like, I'm not giving up what I got. So I need to make more.
Yeah.
Fortunately, I went out and I made more. Well, eventually I got to where there's excess.
Right.
Like I still don't save and I'm not conservative in any way. But fortunately, I make more than I spend because I'm not that freaking crazy.
Right.
But at the end of the day, it's at some point, dude, that's going to run out. So like I need to start investing.
Either this is going to run out. It's a great show. Lots of people. It's creating some great revenue for you. You have other opportunities from it. But what does this look like 5 years? Are you still going to be?
Could be over tomorrow.
Is everybody going to still want to watch Brad Lea in the morning? Who knows?
I could come out in an Epstein file.
And what? Okay, so now we're not going to get aired. And what about your health? What about there's a lot of factors that come into play, especially as we get older.
Yeah,
and it's the unknowns. And again, I'm never saying don't do anything just in case, and that's where you have to find balance. I think balance.
How'd you learn all this? You just were that way, or were your parents?
So my dad worked for the studios. He wasn't
Hollywood.
Yeah, he wasn't a big money guy, but he has 3 Emmy Awards. He was a post-production sound mixer. He made a good living. And I think were always the wealthiest family on the blocks that we lived. And we took
because of his living, or is
just because of them being
money management.
Conservative.
Yeah.
Yeah. And then he opened a business. He had Blimpie restaurants, if you're familiar with those.
Yeah.
He had the second Blimpie restaurant in California. So he took a little risk and did that, did some other things. So I saw him try to do more. I saw him have a stable job, good benefits, systematic. We talked about retirement planning and all that stuff. But I just didn't realize it at the time that we never had to worry, but I also never had everything. Even though looking back now, I know what he made approximately, and I know where we live. I'm like, dude, I could have had the coolest shoes, like 10 pairs of them. I had a nice bike. When that thing broke, I had to learn to fix it. So it was great. We learned to fix our bikes, and then we had cars we were working on. And so I think it was a good example. Like I said, I grew up in a 987 square foot house. He easily at the time could have bought a 3,000 or 4,000 square foot house, but he didn't. He waited and waited and waited. And then when we finally upgraded, when I was born in that house, I can remember looking at places for probably 10 or 15 years. When we finally upgraded, he went nuts and we moved up to a 1,700 square foot house, little better neighborhood. But you know what? It was fine. And now he's retired and he's retired comfortably, has enough savings, has a good pension, and has a lifestyle that he enjoys the hell out of.
He's running around playing pickleball
and traveling. And unfortunately, we lost my mom in 2001 to cancer, and he remarried and happy. And she's got a lot of life in her and he has a lot of life in her. And they all around the country.
And he doesn't have to work.
He doesn't have to work.
Because he did it smart.
Doesn't have to work, yeah. And then she was the number 2 real estate agent in her town. She made a decent amount of money and added to their pot. And then they retired.
What would you end it with to the people that are listening that are like I was? They have nothing, but they'd make good money. What would you advise them to do over the next 3 years?
I'd advise them to just step back for a second and talk to somebody who can advise them that they can trust.
Why not you?
Well, that's what I would say is talk to me. So, okay, I'll be more,
and guys,
I'll be more direct. Yeah. I'm just always, let me help everybody by, yeah.
But dude, the fact that you will, because if you guys go look him up and do your research, you'll realize like, dude, he has, you wouldn't normally get to talk to. I'm surprised you'll allow it. Cause I talk to the guys with the careers like yours and the reputations like yours. And I say, well, will you help anybody? And you know what they say?
No.
Yeah, if they're at like 10 million or more, or they're definitely only helping people with money because that's how they make their money.
Right. And that's what every mentor tells me. And that's what all my business coach tells me, my accountability partners. And I tell them, you know what? If I become that guy, I give you permission to just punch me in the face.
Where do you get that from? That philanthropic, because technically you're at a level where you ain't talking to nobody unless they got 10 million.
Yeah. Well, here's good news. I have clients with 10 million. I just got another one the other day that was coming in with about 5 or 6 million. So I have the ability to do that, but I also have the desire to do it. And my mom used to run the book fairs at school and she used to do stuff. I've been involved with charity, been on the boards of charities. It's just something I do. I'm not out there giving people the money and putting it on Instagram. I do it because I want to do it. Mm-hmm. And I just feel again that if I'm in a place in my life where I can help somebody better their life and I say no, and I stop that opportunity for me to help somebody else, I'm just an ass, but doesn't mean that I can help everybody to the end, but I can start it with the expertise and experience I have. I can get them to the point where I know which person in my firm is right for them. So we've built a company that allows us to do that. And at the same time, allows us to bring new advisors into the company and be successful where normally they couldn't thrive because it's a hard business.
So if there's young advisors wanting to learn, are you looking to hire advisors?
We're looking to hire people. We bring in a couple new advisors per year just because it's hard to support more than that. But we are looking for experienced advisors right now in my office in Irvine and then in the Santa Cruz office. But in reality, we can handle anybody around the country. We have a presence in Idaho. We have a presence here in Vegas.
Where do they apply?
They can just look to me and I can get them out there.
Where do they want them to hit you?
Hit me on my email, hit me through socials, email J Citarella, JCITARELLA at PFRIA.com, or just go to Jerry Citarella Presents on any of the socials and you can find me through there.
Hit him up in the DM, blow him up. Where do they get your My Truth Hurts Help series books? Are they like on Amazon and all that?
Yeah. So you know what happened?
What?
I changed emails too many times. They're still on those things, but I just found out the other day that they're there, but you can't buy them anymore. And I've been trying to get in touch with them. So I think I need to relist them. It was the #1 bestseller for 2 days. I'm proud of that on Amazon. We did some good marketing. I have a bunch of hard copies. If somebody wants it, reach out to me. I'll send you one. I'll autograph it, make it worth nothing. I'm happy to give them out. And that book, just so you know, that book was, again, it was about the need for planning. It was about understanding some of the basics, like really important stuff. Like most people say, I want to get into a portfolio and I want to get the one that has the highest interest rate or highest return. A portfolio that earns 8% can actually have more money at the end than one that earns 9%. So it's not the number, it's how you get to that number. And we care about how much money. So I talk about that. And then I teach people how to identify, interview, and choose an advisor and how to hold them accountable. And the last chapter is needs versus wants, a lot of what we've been talking about and really understanding it. And I put those two things, and I'll end with this. I had a 78-year-old client once that had an online spending habit, and I wrote need and want in her hand, and I made her stare at it. And she looked at me like I was crazy. I said, I need that to be embedded. So whether it's physically or theoretically, you're reaching out to get something, I need you to see that need and want, because you're spending all your money. And we need to understand, is this something you need or is this something you want? And you're allowed to have some wants, but once the needs are taken care of. And I think that's really important. You know, we need shoes. People want shoes that people go, nice shoes, right? We need a car, an A to B car. We want something that people go, cool car. Doesn't mean you can't have something nice, but what fits appropriately into your plan? And then let's upgrade it as things go better. I'm all for cool stuff, but not at the expense of your family's well-being, not at the expense of your retirement. I mean, imagine you're 75 years old and you run out of money. You ever go into a fast food restaurant and you see some old person serving food? That's not a choice. It's not a choice. That's something.
No, it is a choice. Series of them his whole life.
Yes. Right.
And they were the wrong ones.
Yeah.
And that's why I'm smarter now. And I'm like, dude, I gotta get caught up.
Yeah.
I'm thinking real estate. I don't like stock markets. Why? Well, because dude, you're either in the inside or you're not. And if you're not, dude, you're freaking. But indexes, sure.
Yeah.
Like, the S&P.
Well,
I don't want to buy one stock on the S&P. I'll buy the whole S&P, because over years you can see it's going to go.
Yeah. And
it's conservative.
And I'll say that mindset is better than trying to pick a few stocks without knowing what the hell you're doing. And that's where we live. Modern portfolio theory, that kind of thing. But we have the ability to pepper in some stuff with a little bit of inside knowledge to be able to, again, S&P 500 has done what it's done. Our portfolio, we stack up against that, has done about 6.5% better per year for the last 10 years. That's a big number if you compound it. And we're real proud of that. And it's done it with less volatility. 2022, when the market went down, our portfolio that made more over 10 years lost less that year. So we've been able to perform better with less volatility.
The only time I've picked a few stocks, I've won, but not permanently. In other words,
like you didn't sell.
Like when COVID happened.
Yeah.
I heard conspiracy. Bill Gates owns Moderna and blah, blah, blah. But and I'm like, well, shit, if Bill Gates owns that shit, I want to own that shit. So I bought Moderna.
Yeah.
And sure enough,
took off.
Started going up.
Yeah.
But I sold.
Yeah.
I didn't hold it.
Good.
I made money.
That's what you need to do. Some people hold them too long and watch them go down. Yeah. And the people buy stocks, if they do well, they typically hold it too long. Okay. And then as it starts to go down, what happens? You think it's going to come back, and then you hold it and you hold it and you hold it. When do they typically sell? Right before it starts to eventually come back, because everything has a cycle.
But does everything have a cycle?
Most everything does have a cycle. You see them, not all of them. If you're buying some high flyers, when
it drops, it never comes back because it goes bankrupt.
Well, that's an extreme story. Yeah. So I said everything, maybe not true, but a lot of things cycle through, and whether it's extreme or whatever. But what I always tell everybody is you can't buy anything. If someone says to me, I want to buy this stock, I always say, what's your exit plan? Well, what do you mean? What's my exit plan? I haven't even bought it yet. Well, don't buy it until you know what your exit plan is. Are you going to make 10% in sale, 12, 15? Once it gets to a certain point, are you going to put in stop losses? So if it comes down, you minimize your losses. Or your exit plan could be, I'm just going to hold it forever because I think I'm going to get rich. Okay. As long as you know what the plan is, because then when something goes wrong, you don't have to think about it and you know what your goal was. Too often somebody says, I think I can make a little money on this, with the mindset being 10 and it jumps to 12. All they wanted was 10. Now they're at 12. So they hold on for 15 and they end up losing 15. So you just have to know the why to what you're doing and then put a plan around it that way, at least when you're there. And you can always adjust, but you need to know what it is. Otherwise, you're just going to get in this place where you're going, I don't know what's happening. And it becomes an emotional transaction then. And those never work out.
So you do a lot for people. What can the bomb squad do for Jerry?
Well, the bomb squad can raise awareness. The bomb squad can create vision and eyes and point people to the stuff that we're doing. I worked a very, very long time in a small community. What I love about that community is it's tight knit, and everybody in that community that was going to use a financial advisor used one of three of us for the most part. And we were very fortunately one of them. I'm trying to take it wider now. And with technology, I started out 25, 35 years ago, whatever it was, going to people's homes, meeting people in parking lots, signing contracts on the hood of a car. It was fun stuff. Going there, they give you chips and dip, making you dinner. I mean, now with this and Zoom, there's no reason, and I'm getting more and more, I can't help people all across the country. So I'm structuring my business in a way that I can expand in a way that I haven't been able to before. The next thing we're doing, because our investment models have done extremely well, I'm creating an environment where people that just say, I don't want to have a financial advisor, I just want to invest money. I'm creating an opportunity for them to get into our models without the normal fee that they would pay for full planning. I fully believe in full financial planning, and I don't think everybody should do that. But to get to that point, we're going to have an AI interface that goes through a planning process with them as best it can without it being live. And then they can always do some a la carte stuff. So trying to help everybody, and we just need to get the word out. You have a much bigger window to the world than I do. So I appreciate you having me on, Brad.
Well, buddy, it sounds like you deserve it. You've been helping people forever. Folks, you guys want a job? You're in the financial space, hit him up. You might get hired. He doesn't hire everybody.
Nope. We turn down more than we bring on.
If you guys don't know what you're doing financially, either get his books, go to Let's Talk Money, or just DM him. He said he'd help anybody, which is crazy. And Jerry Citarella Presents, is that just a at Instagram handle, or do you have a podcast or something?
Well, so it's Instagram, it's TikTok,
what's Presents?
It's YouTube. So basically, what happened is I was trying to figure out how I can share the word So I do a talk. It's called Avoiding Your Wish I Would Have Messages from Your Future. It's 35 years of listening to people tell me the things. I've talked to people on their deathbed. That's how it starts. A guy in his deathbed, he said to me, hey.
I want that series.
This guy to me said, hey. When he said, hey, I knew he was about to give me his final words. Like, this is serious. We both made believe he was coming out.
Where do I get that
We both made believe he was coming out of the hospital. We knew he was. And he said, hey, and I listened. Okay, this is a guy, 67 years old, about to die of cancer, said to me, take care of that beautiful wife and those amazing kids of yours. That was his advice. Not work hard, nothing. Basically, he just reminded me with his final words, family's all that's important. So I've listened to these messages from people, and I've been able to share a lot of things that I've learned from people in retirement, divorces, lost a kid, won the lotto, and the things they share. And there's a few commonalities in what they do. So the first show that I did on my Jerry Citarella Presents was Avoiding Your Wish I Would Have, in that conversation. And that ends, and I'll end the show with that ends with my mom, who was dying of cancer. And we knew she was going. And there were a few of us in the room, and we all went in to say our last words to her while we knew she was still possibly coherent or able to listen. And I won't be able to say it without getting teared up. So I leaned in, had no clue what I was going to say. And I just sat there and realized there was nothing I had to say, not one word that I had to say. And all I said is, thank you, Mom. I love you. And the feeling of having that relationship, I can't even do it. The feeling of having that relationship with my mom, where there was nothing, I didn't have to apologize. We had such a great relationship. So I always tell everybody, if there's something in your life, there's someone in your life that there's a problem, there's a beef, just get on the phone. It's not worth it. You just never know. So we got to make sure that we avoid our wish I would have. And I just try to share that advice.
There's a bomb. That's a nuclear bomb. Well, dude, I appreciate you coming in. Folks, you know where to follow them. Save your money. And more importantly than saving money, keep it real.